All right, so you guys are a smart crowd, so you probably figured out we're doing our first panel of the day. It is going to be moderated by Suvashree Ghosh, who's actually a reporter at Bloomberg, and she is going to be covering and introducing her panelists about cross-border payments, which includes on-chain forex, what the regulatory concerns may or may not be. So please give a big round of applause to Suvashree Ghosh and her panel.
Thank you so much for the introduction. May I have my panel members, please, here? Thank you. Thank you so much for joining us early in the morning, I would say, for all the crypto late, all the parties that we had yesterday, I guess. So we're going to start off with a very important topic, which is cross-border payments and how stablecoins are potentially the lead for this kind of use case. It's a very important and much talked about topic, and I would like to start the discussion firstly by requesting my panel members to please introduce yourself briefly before we kick off. Sanchit? Yeah.
Thank you. Hi, my name is Sanchit. I'm from Worldpay. I take care of the crypto business for APAC. Worldpay is one of the world's biggest payment acquiring firm. And those of you who are not familiar on the acquiring side, we can have a side chat after this panel. And happy to be here. Thank you.
Hi, everyone. My name is Rasoul. I'm the co-founder and CEO of YODL. YODL is a brand new consumer-grade payment app that basically abstracts away chains and tokens in your payments and makes it frictionless and easy to make payments no matter what chains and tokens you prefer.
Hello, everybody. My name is Devere Bryan. I'm the general manager at First Digital. First Digital is the issuer of FDUSD, which is currently the third largest one-to-one backed stablecoin globally. Sits in the top 30 of all tokens. Very happy to be a co-host of the event and very happy to speak today.
Awesome. Hey, everyone. I'm Shamus Noonan with Circle on the business development team. I lead all of the blockchain partnerships. So anytime you see USDC, EURC launch natively on new chains, I help strike those deals. Circle's the issuer of USDC and EURC, as I'm sure folks know. So a huge thanks to everyone for coming. And Suva, excited for this chat?
So am I. Thank you all for the nice intro. I'll start with the person at the right at the end. Okay, so Shamus, firstly, I wanted to understand, we will touch with regulation. We'll start with regulation because that's, I think, one of the most important topic for everyone or every issuer and every participant in stablecoin. Circle is regulated in some of the jurisdictions, but not in others as well. And there's other stablecoins which are not also. I wanted to understand how important is stablecoin regulation when it comes to cross-border payments, especially because it involves several countries.
Absolutely. For Circle, we're taking a regulatory and compliance-first approach. We think in order to allow cryptocurrency and stablecoins in particular to really go mainstream, like users, counterparties, banks, everyone to use this, we do believe the long-term vision and way and path to this is regulation. And one specific sort of region to call out is Europe. And I think what's really interesting going on with the recent MiCA compliance and Circle with USDC and EURC is 100% MiCA compliant. And that means it's deemed legal currency the same way a euro is. And it's going to be really interesting, right? Because from a regulatory perspective, this unlocks a few things. One, it allows large institutions to get comfortable and start using this. And following the MiCA compliance announcements and Circle being 100% compliant, we're getting a lot more big banks, telcos, big Web2 distribution providers saying, hey, we've been keeping an eye on this. These stable coins are interesting and this blockchain technology is interesting. We'd like to chat now. And this is something we're potentially comfortable rolling out to our users. There's clear protections in line. There's clear counterparty risk. There's clear consumer protections in place. So that's huge. And obviously there's regions. We're a US-based company. We have applied for state-by-state licenses through MSBs and MTLs, like money transmission licenses. So we're doing everything we can to get the proper approvals in place, because we think the long-term vision, which might be a 5-year roadmap, might be 10-year roadmap, is every country, every region has these laws in place. And I think regulation can be a loaded word at conferences like this, but regulation's also meant to help protect consumers and prevent money fraud and laundering. And that's really important, because we need these big institutions, we need these bridges. We're not ready for a totally unbanked world where we just use stablecoins for day-to-day things. So that's a big thing for us, and Circle's going to continue going about applying for the right licenses and taking a regulatory and compliant first approach. And the last thing I would say is, I think it's really crucial, and we all need to work together on this, is it needs to be interoperable. And what we're hoping and trying to educate regulators and folks around the globe is, we're trying to show folks how easy it can be to move money digitally on the internet through blockchain technology. If each country and region starts introducing specific, very, very specific tailored things that are not interoperable, we're going to end up right back to traditional finance rails. So that's something I think we all need to work together on, but obviously from a Circle perspective, we're going to be taking a regulatory and compliant first approach. So yeah, that's what I'd say for us.
Quite a few points that you mentioned that were relevant. One I hear was harmonization of regulation when you talk about interoperability. And you also talk about getting regulation helps to get money, because you get those partners, and therefore it's good for, I think, the companies as well who are getting regulated. That brings me to Devere. So what do you think FDUSD's thoughts are when it comes to regulation? And you are also a quite prominent stablecoin on the DeFi world. So I would also want to understand a little bit more from you about the DeFi regulation overall.
Okay, I think what Shamus just said. For any issuer of a one-to-one backed stablecoin, you have to go out with a compliant and regulation first mentality. In order to grow, in order to normalize, in order to create transparency, for real-world users to start to adopt stablecoins, start to adopt crypto, you need to make sure that you have those fundamentals in place. First Digital is built off those fundamentals. We have a structure that's built off trust, and we make sure that we do everything that allows us to become regulated when that inevitable time comes. When it comes to DeFi, I think DeFi, the benefit of regulation in DeFi is around transparency. We've seen that there's a lot of DeFi protocols that pop up, they disappear, there have been some bad actors. I think regulation, if you could get into a position where you have some sort of embedded supervision, has been a buzzword that people have talked about, that's something that lots of DeFi protocols would kind of be fearful of potentially, but I think in the long term it'll help them. It'll help them because I believe that investors, like real world investors, institutional investors, want to see the clarity, want to see, the source of wealth, source of truth and whatnot. So in the long term, I think it's inevitable, and I think it's a positive thing. But it comes down to, showcasing what is decentralization. It's a long journey, before we get to that point. But I think, as I mentioned, it's probably inevitable, and we're going to be in pole position at First Digital to help them on that journey.
That's a good point. It's a long journey, and I think we all talk about how stablecoins are a big use case for cross-border payments, for remittances, but when it comes to regulation and therefore adoption, I think that's a little bit of a gap, because the regulatory lack of regulation could be one of the hindrances to the adoption of use case on a broader scale. And that brings me to the next one. Rasoul, if I can hardly see you, but
sorry, sitting comfortably here. Excuse me.
That's fine. You can face the audience also. I wanted to understand, what do you think? YODL is a very young company and handling payments. So how do you bridge those two worlds where people are still waiting to be regulated and there are people who want to plunge but still not sure whether they'll end up in jail or not?
Honestly, so the way I think about it is not necessarily the regulation part of it. So the adoption of it, I don't think that's about regulation. So if we're talking about institutions, banks, and other corporates, yes, of course, they want that to happen because otherwise they cannot deal with it. But if we're talking about end users, consumers, me and you, I don't think that regulation is the big driver. What I believe is that interoperability is the biggest factor that we have right now that actually hinders adoption. So what we're seeing is, you know, we like to say that well, everybody is building a new wallet, a new dApp, a new, I don't know, a new chain, a new coin, a new stablecoin, and that's awesome, that's perfect. But it makes adoption harder. Every single day that passes, adoption gets harder because we see more of it. And so this is one of the problems that we've identified and where we said, well, at the end of the day, these things need to be interoperable because irrespective of which chain you prefer, which token you prefer, we want to make transactions happen. Okay, so you can hold a stable coin like a USD Glow because, hey, you feel good if, you know, the yield goes to some philanthropic causes, or you can hold a USDM because, hey, that's a yield-bearing stable coin. That's amazing. Or you can hold a USDC. It's fantastic. But my preference might not be your preference. And in a payment context, that's absolutely crucial. If you cannot have an understanding either that, you know, we're on the same chain and we're on the same token, that's what I have in my wallet, that's what the other wants to receive, we cannot make a payment. It's as simple as that. And that, for me, is the biggest hindrance right now. And so what we're working on is abstracting this away as far as we can, right? The end goal is that the user for sure doesn't know what chain he's on or she's on because that is just way too technical. Maybe you have a preference for certain coins, right? Particularly stable coins, because there's different needs. And so our goal is to really abstract everything away and make a payment happen as smoothly, frictionless as possible. And we're currently doing this in a decentralized, self-custodial way, which is a very, let's say, crypto-specific way, right? But in the end, this needs to work for a normie. So we're building a product that, that a degen wants to use, but at the end of the day, also a normie will understand how to use. And that's our long-term goal. How do we make that happen for today, but also thinking about the future? And one more comment maybe in terms of stable coins and the adoption. You have two very large stable coins out there today, massive. And they have benefited from network effects because it's not interoperable, okay? So you have this token granted on many chains, and you have the other big one, and then everybody else. And these everybody else, they need to find a way to get liquidity, first of all, and then also to be used. And that's what we've seen. We have two great examples with USD Glow and USDM, where on YODL, you can now basically pay in USD Glow, even if the recipient wants to receive a USDC. We just auto-swap that in between, but we make this thing work. And this also for stablecoins. No matter the size of the stablecoin, if I want to hold that, that's great. But the merchant probably wants USDC at the end of the day.
Quite important points that you mentioned, Rasoul. Interoperability also requires investments. It requires, people the chains to talk to each other, which is very important for payment adoption. And the other thing, you stole a part of my later question about, big dominance of stablecoins. But I'll come to that a little later. So coming to basically importance of adoption And I want to talk to you, Sanchit, about what does Worldpay say that, in terms of adoption, and how are you handling it in the company in terms of raising volumes? What are the pros and cons? What are the concerns you are seeing as well?
Sure. So I'll just give you a quick context of like what Worldpay does, right? So we enable our partners to be able to accept card payments. So if you have used Netflix, Singapore Airlines, Amazon, most likely you have used Worldpay in the background, right? So we help companies to be able to accept card payments. And what happens is once the card payment is done, we are the bridge in between that works with the issuing cards bank and the network schemes and move the money and settle it with the merchant. Now, in Worldpay's case, what we do is, once we have taken the money from the issuing banks of the end customers, we convert it into USDC. We work with Circle. And then we transfer it to our merchant on chain. So what is happening here? So in the traditional world, we would take that money and we transfer it from our bank account to merchant's bank account. But in this case, we convert it into USDC and send it on the chain to the merchant's wallet. So there's no bank on the other side. That's one. The crypto merchants, they love it because anyways, even if we send them USD, they will convert it back into stablecoin, right? So we save that leg. And third is the transparency as well. So you can see all the transactions on chain and it's way cheap, right? And you have the transparency as well. So this is the future that we are seeing, and we believe that this is where the growth would be, right? And it will move fast as well. So to answer your question, I believe this is just the starting. We are moving billions of dollars in stable coin, and I think it's just the beginning, right? So currently, the crypto merchants, mostly the crypto exchanges, love it when we send it on the chain in stable coin. But I believe that moving forward, even the traditional players would like to have it on their wallet as well.
You didn't answer my question about the volumes for Worldpay.
Yeah, sure. I mean, so like I mentioned, we do probably about close to $2 billion in volume in a year, but this is just moving the money. But this is just a start, right? So in a traditional world, we are doing trillions of dollars that we settle a year. So when we compare it, I think it's just the beginning. Even though it's a very decent volume, but it's just the beginning, and we are seeing great demand for this.
That's a nice segue to my next set of questions. Great demand, also a lot of use cases, especially in payments. Does it make money? That's one of the crucial things I think every participant in stablecoin world would want to know. Starting with, I want to ask Shamus this first, and then I'll actually go random so that people are not expecting to respond. It's easier to catch them off guard, maybe. I'm sorry if that's something I'm doing to my panel members. But I wanted to understand, Shamus, from you, how does Circle want to make money, apart from the treasuries, the plain vanilla money-making business?
Yeah, we have a suite of tools for developers, and a big unlock we think is going to be crucial for this is for these big Web 2 developers that are looking at stablecoins, seeing this. A lot of the feedback is like, hey, this is interesting, but like we're used to this type of tech stack. We have all of these things that we need to do. So we're rolling out and already have live a suite of Web3 services, think like wallet as a service, and basically trying to abstract away all the complexities behind setting up wallets on behalf of users and things like that. So developers, if you think of the funnel, like we're trying to hit the top of the funnel, so enabling developers to build on USDC. And a lot of developers might say, hey, like I'm thinking about this, but I want to ensure that USDC is native, and I need these suite of tools. So we're going to continue to roll out and making big investments there. We're incubating, we're always incubating and looking into a lot of other products and services, things like that. Like, are there additional stables that we can expand to? I think the large focus for the foreseeable future will be USDC and just building those network effects. We're working on a variety of other partnerships, just banking partnerships globally. How can we make USDC the most liquid and accessible stablecoin globally? So I would say from a money-making perspective, it's not necessarily like how do we do this or that? It's what is the market telling us? What are consumers, developers, enterprises telling us? What additional, and my remit of focus, what blockchains are we seeing a lot of demand for native USDC? And we recently introduced a bridge standard, which is a mirror compatible, basically characteristic of a native USDC issuance that, as of right now, any EVM compatible chain can permissionlessly roll this out. And it's a great way to show initial traction, and that can help us point to additional blockchains to deploy natively on. We have our cross-chain transfer protocol, which is doing about 1.2 billion per month in volume right now. So we've seen explosive growth on that side and a lot of demand for users that want to transfer, to mint and burn USDC from one chain to another rather than bridge it. So it's just the start, and I think for us, we're applying for licenses in all of these jurisdictions that are open to digital asset frameworks. So with that's going to come demand for new products and services as well. So I welcome if anyone has Circle-specific requests, please find me after. But we're excited. We'll see what it brings to us, but we're hoping to offer a variety of services.
That's a good marketing pitch at the end by a BD. But coming just to ask a little bit more about when you said that partnerships are really the key for making money, right? So in terms of partnerships for Circle, because it is a cross-border panel, I want to understand how important are payments, which are, like Rasoul was saying, it was retail. So how important are retail versus institutions when it comes to making money for use case?
I would say from Circle's perspective as an asset issuer, we're predominantly a B2B company. And partners are so crucial to us because it's a B2C model. So partners like Worldpay and others are so important to us because we want to find partners that have similar sort of core principles. And it's not like, hey, how much can we go out and like profit off of this? It is like, how do you envision the world a year, 2 years? Like Sanchit, it's spot on. It's like, this is just the beginning of back-end payments, and it's a complete unlock. We are trying to get in touch with large distribution providers globally, whether it's a bank, whether it's a big conglomerate looking to move money just intra-bank. Those are the partnerships and partners that want to align with local like regulatory and compliant framework. Those are the partners that we think unlock it. The value exchange and economics, like I can't really comment on that, but I think from our perspective, those core principles unlock the network effects and users and liquidity that, that's what matters. That's why we're all, I think, here, and we like, I don't know, I'm bullish as ever on stablecoins right now. I think it's really exciting time to be here at the Stablecoin Summit and just where we're at. But yeah, I know, I wish I could point to one specific thing, but I would say those are the core principles behind a lot of partnerships we do.
Makes sense. Rasoul, if I can throw the question to you now, how will YODL make money? What is the economies of scale? At what point do you think you can break even?
So there's a couple of parts to this. Because YODL works, the protocol works for end consumers, users. It works for merchants in an e-commerce case. It works for merchants in a brick and mortar case. It's the same protocol that you can apply to all these use cases. Now, in a peer-to-peer case, as history has shown, and we know today, you can't make money by sending money peer-to-peer. It doesn't matter if it's cross-border or not. That doesn't work. So where we will make our money is with commercial transactions. However, we take a 0.2% transaction fee, which is ridiculously low if you know how much credit card schemes, for instance, take. And the reason we're doing that, and this is the second part of it, is because we want developers to be able to build on top of our protocol. So yes, we're building the first couple of versions, let's say for the peer-to-peer payment with a dApp, maybe an e-commerce version, and a brick-and-mortar version. But ultimately, we want everybody who has an idea that it, touches some form of payment to build on top of YODL and use our interoperability layer to make all possible payments happen as easily and smoothly. And that's one of the reasons we have decided to, we keep the 0.2% ridiculously low fees, because that allows room and margin for developers that want to build on top and also earn on top. If they figure out great ways to include a payment in whatever they're doing, they can decide what margin that they can make from this and charge accordingly. So, and that of course is true also if they build, cross-border, specific cross-border payments with stable coins, whatever they can think of. It doesn't matter what it is. And so we just like to think of like being an enabler of all of this. And by doing that, that's also the growth case, right? So we believe that's where the scale at the end of the day will come from, not from us building everything ourselves. We are taking everything that exists already in the space. We look at, what works, what's the best, what can we integrate, and we're not reinventing the wheel. Most of the things do exist, and they're good. And our job is to make it interoperable, that it works at the end of the day for payments. I think that's a specific part, right? Because if you think about stablecoins and how they're being used today, there's different use cases. I've read a study that I think came out last week, plus minus. Most of the stablecoins are being used for currency conversions, right? You're basically just buying the stablecoin because you need a stable currency and you don't have it in your home country. And then the second, payments with stablecoins comes way back, right? And then earning a salary in stablecoin, I think that was the last on the list, right? Less of 20% of the participants actually said, well, I receive my salary in stablecoins. And so there's a lot of work still to be done, because just transacting for an exchange, I hope, is not the end use game right here that we're playing. We want this to be used for everyday transaction. There's a long way to go to do that, but interoperability for sure is the first step.
Yeah, you keep harping that point. I got it very clear, loud and clear. For Worldpay also, you are a payment company, and what are your thoughts about how long will you be able to go before you make money for the company? What is the runway?
Yeah, I think we are a payments company, right? So our fees come from the acquiring fee, which is part of the MDR. So those from the payment space, they would know that if you spend, for example, $100 at a merchant, the merchant only gets maybe $98, right? The remaining $2 gets split between the credit card issuing bank, the schemes, Visa, MasterCard, Amex, and then acquirers like us, payment terminals. So there's a whole value chain out there. So we earn money from there. But from stablecoin perspective, we are saving money for the merchant. How, right? So when we convert it into stablecoin and send it, we are saving on the fees that the bank charge. The conversion rate is faster, and they don't need to do the conversion again and again, right? So if the crypto merchant in the end still uses the stable coin, they don't need to convert the fiat into stable coin again, right? So there's a cost saving there. That's one. The second is, from merchants' perspective, they can always stake it. They can always find ways to generate yield out of that. For us, we are working on a project where we will be exploring ways where we can also do a staking or generate revenue from there as well. But it is something which is work in progress.
That's a very interesting newsy bit that you're working on staking. I can follow it up later with you separately. Devere, we know that a large part of your volumes have come. You are one of the top 5 stable coins now. A large part has come from a particular exchange. If I can name, it's already known, public. It's Binance, right? How important is Binance's platform for you to make money?
Well, when you go live, we're the new player, right, on the stage particularly. And, but we went live with the largest exchange globally. That gave us a great platform to start marketing our brand, start to gain adoption very quickly. So Binance for sure is very important to us. But we're very agnostic. You know, the first 6 months of our life as a stablecoin issuer really was sitting on Binance and learning. The last 6 months, we've been around just over a year, has been around expansion. So we've been working with many other exchanges. Actually, we're available now on 12 different exchanges around the world, and we're learning how to get deep with those guys, understanding how they play, where they play, how they can create organic growth for us through DeFi, potentially through payments and whatnot. So, you know, they're super important for us, but we're totally open to listing the coin on any exchange. And when it comes down to making money, it's a very similar answer to Shamus, right? We see the majority of our utilization coming through trading, but we're opening partnerships as well. Partnerships is the key. Looking at real-world partnerships, for example, countries like Philippines, where we've listed on CoinsPH, a very large exchange down there. We know that around 65, 66% of the Filipino population is unbanked. There's an opportunity there to help those people. There's an opportunity to work with money providers, also like money payment service providers, and with telcos and whatnot to get distribution of FDUSD into the economy. And then you'll see growth, you know, small margins, as you just mentioned, but you'll see growth.
That's a very important point about underbanked as well as currency fluctuation, these being two big reasons for people to go for stablecoins. And that actually helps me to come into my next set of questions. And Shamus, I wanted to understand how, and if you could share with us some numbers, whatever is possible, how much is Circles, because APAC is a big region, and like for this kind of use cases especially, how big is the APAC for Circle in terms of, you know, stablecoin volumes or whatever, and how does it compare globally? How important is APAC basically?
Very important, obviously. So I would say USDC volumes to date, as of September of this year, just surpassed 16.2 trillion. Last year in 2023, overall USDC volumes were around 30%. So we'll see what it shakes out to for 2024. I would say overall, Asia Pacific is just, there's such good product market fit. It is so ripe for stablecoins. There's 38 countries here, and a thought experiment I was thinking about of how ripe it is, right? Imagine if we had a panel of 38 people from each country of Asia Pacific. And I said, hey, I'm gonna send you 100 USDC, and I want you to send it across the circle for each person, right? If it's a single blockchain, and we're available and live on a bunch of blockchains, but like a fast, low-cost blockchain, maybe it takes each user a couple of minutes to get set up. I would bet most of them have smartphones. We might be able to move that 100 USDC around pretty quickly, a couple minutes. That end user, the 30th person, might be sitting with 99 USDC. If we did that same thought experiment with dollars, I said, here's $100 digitally. I'm not giving you physical cash. You got to move this around. Chances are I wouldn't make it to probably person 5 without it being interoperable, and it'd probably take 3 weeks to do. So whether it's trade finance, remittances, cross-border payments, we're seeing an explosion of demand for this. There's a lot of things from like an end-to-end perspective to make this happen. Predominantly, like we'll shoot it straight. It's trading, right? Like big market makers, exchanges. It's trading here in Asia Pacific, but like I think there's over 1.8 billion online users here in Asia Pacific that are already using a digital wallet. So to make that switch into a self-custodial wallet and start using USDC as that form of payment, we're working and have worked with Singapore and other jurisdictions here of like what needs to happen to make this legal currency. You know, what can we do to help enable this and help work with regulators as well? So we see it as a massive, massive opportunity. In 2021, my last stat I was studying this morning over coffee, there was 280 billion of remittance inflows that came into Asia Pacific. Average fees for that are about 5.7%. So again, if we can get that moving on blockchains with stable coins and USDC on some of our blockchains, we're talking pennies or even free cents. So it's not like a new widget. It's not like a BIP or two. We're talking step-level changes, like Sanchit said, for issuers, acquirers, consumers, banks. And we're really, really excited about this. This has been a big region and focus area for us. We have Circle Singapore. We have a physical office here. So long story short, really bullish on Asia Pacific and USDC, and we'll see what happens.
Can I pin you down on a number? How much percentage will that be, or is it for stablecoin volumes?
Last year for
APAC.
USDC, total volume was 30%.
This year?
Hard to say.
far?
I would guess number go up more. I would say, anecdotally speaking, because it's September, right? So we'll wait and see what happens. With our principal in license approval from the MAS here, we're seeing a lot more larger institutions saying we want to use USDC. It's a flight to safety. We're opening more accounts here with our Circle Singapore Mint accounts. So we're seeing a lot of the use cases I mentioned for cross-border payments, trade flow, and then just big, large exchanges here. So if I were to guess, the number would be up, I don't know, 5-10%, but that's totally back of the napkin math here. So hopefully it's a big number come year end.
You wanted to say something, Devere?
I was just going to say, to add to this, it's great. It's a great, update there from Shamus. But when you look at the interoperability piece, we've talked about interoperability between companies, but interoperability between countries is critical in APAC. Of those 38, 40 countries that are in APAC, there's so much cross-border trade beyond anywhere else, more than Europe, right? There's no opportunity bigger than that. For SMEs make up about 95% of the economy. People don't realize those SMEs are trading cross-border, trading between Singapore and Malaysia, Singapore and Indonesia, right? Indonesia and Malaysia. The friction that is there for all of those companies is huge, right? And that's where stablecoins can come in and help create, a direct link between those countries over time.
Very true, and I think we discussed a little bit about regulation and harmonious regulation for interoperability in this regard. Thank you. Rasoul, if I can just ask you about there are so many, and this is I think the final round, we have just 5 minutes more. There are like hundreds of stable coins, right? And just maybe top 5 of them are hogging the 95 to 97% of the volumes and the market cap. So how do you choose which ones, and what happens to the remaining? Do they die a natural death?
Yeah, you're gonna scope me again for bringing up interoperability. But as long as we don't have that, as long as we don't truly have that, it's all about network effects, right? And which means that whoever is winning today will be winning in the future. I think it's as simple as that. At one point you're locked in because all your friends and family and your business partner use the same, and we see this in certain locations around the world where it is very clear what is being used, right? There's no question. No need to come with something else. Now, what I do see, and I also do believe, is that we will see a lot of stable coins coming up from all walks of life. Whatever they do, right? May they come from, I don't know, old like Web2 businesses or new companies, or there will be tons of them, and they will be doing tons of different things. But all of them will have to fight, right? Because they don't have a lot of liquidity. They're fighting against at least 2,000-pound gorillas in the room. I think we will see a lot of them. We might, after that, see an implosion. But I do believe there will be still many around at the end of the day. The way I think of it is there won't be less stable coins than, let's say, fiat currencies around the world. That's my personal opinion. I would be very surprised because in a payment context, you think in your local currency, right? If I'm in Singapore and I buy dinner, I'm still thinking in my local currency, what does that cost me? I don't think in USDC, or US dollars. It might be helpful, but that's not how people work. And so I believe there will be many stable coins out there. It will get overboard in the next couple of years. It will crash down, but we will have more than just 1 or 2 players out there.
Sanchit, I also wanted to ask you a little bit additional question on that. Like Rasoul was saying that there will be several stable coins. Does it make us money sense as well for those kind of stablecoin issuers, because there'll be so fragmented use of those stablecoins. So first question being the same, that do you see all of them existing or some dying? And second being the economics of issuing them at that level.
Yeah, so from Worldpay's perspective, I think for us is to move the money fast, right? So currently, if we have to work with a stable coin issuer, regulation is key for us, because anyone who touches fiat, you are touching regulation, right? And that's why we work very closely with Circle, because Circle is regulation first mindset, right? Talking about the number of other stable coins, I believe there would be different use cases that these stable coins can be used for. But from the payments perspective, anyone who moves the money in a regulated way, fast and cheap, we would love to work with them.
That's great to know. And that's actually a little bit of an obvious thing to say, I would say. But yeah, good to know. Devere, what are your thoughts about some dying, you living? Not you as in,
No.
I'm sure you will
Look,
live long, but the first digital coin.
Some companies don't realize how difficult it is to really run a stable.
Very true.
It's not simple. You don't just turn it on. You need a tremendous amount of infrastructure and partnerships in the background to make it work. Our structure allows us to do that and be confident in our growth over the future. Somebody in our company, our COO, actually coined a new expression recently, saying, this is the stablecoin summer. Hopefully, he doesn't hate me for stealing his words, but this has been the stablecoin summer. I feel like FDUSD almost kicked that off. We started this new summer, but we were there at the beginning, and we have, as you mentioned earlier on, a strong platform. We've got a very strong underbase, but we've got a very strong platform to keep strength growing. A lot of the players that have come into the market recently don't seem to have that. And I wonder, as rates come down, I think companies will come down too.
That's a very important point. And just closing remarks from you, Shamus. So what do you think about the longevity of and sustainability of all kinds of stable coins?
Yeah, I think Devere talked about this. It's network effects. It's a big statement to say we want to be the most liquid and accessible stablecoin globally. We really do. It's really, really hard to do that, right? So any country, any user wanting to onboard with USDC, for instance, to be the cheapest on-ramp, there's just so many things that need to happen. So we're excited about that future. We have a lot to do, a lot of things that keep us up at night. We're working on and expanding our partnerships. But I couldn't be more bullish. I like stablecoin summer. That's a good one. And the future outlook and having conversations this week, this is what motivates me. This is what keeps my drive and passion going, and working with wonderful folks like folks here and everyone else. So couldn't be more excited for the future of stablecoins. So bring it on.
Thank you so much, everyone. That brings us to the end of this panel, and it was wonderful talking to all of you. I think the one common point that we all agreed, and that it's a long way off, but there is a lot of future in this. Thank you so much for listening to us. Thank you.
Thank you.
Thank you very much.